Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq Stock Exchange. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Ben Jones, Product Development Manager with Nasdaq Index Research, joins me this afternoon with a Nasdaq-100 trend update. And Ben, as we like to say in the business, the trend is your friend, and we're certainly seeing that with the Nasdaq-100.
Yeah, for sure. It's a good adage, and it's one that has been quite true since that March 2020 bottom. When we see the market, begin to firm in the midst of the middle of the COVID-19 pandemic. Since then, we've seen a lot of strength and outperformance from the Nasdaq-100, consecutive months of positive returns. However, it looks like we're seeing some short-term weakness from a trend standpoint. Looking at the Nasdaq-100, while the index is still up over 25% for the year, it's experienced its worst month really since February and March, and it's down about 7.9% so far in September. This is the worst September that we've seen for this index since September 2008. If you could think back to the Lehman Brothers event, I think the Nasdaq-100 was down over 15% in that month. Again, it's only 11 days in. There's still a lot of strength present in the Nasdaq-100. It's just short-term weakness, right? If you look on the chart on the left-hand side, classic chart looking at the Nasdaq-100 with its 50-day moving average and 200-day moving average plotted. What we see right now is that it crossed back below its 50-day moving average, a classic sign of some near-term, weakness from an absolute momentum standpoint. However, it's still well above the 200-day moving average. And I think what's important, Jill, to think about is that, that's looking at the index itself. If you look at the constituents, right, the components that make up this index, those are on the charts on the right-hand side. You see that there's still plenty of strength and breadth internally from a trend standpoint. Right now, over 80% of Nasdaq-100 components are trading above their 150-day moving averages. We see right now over about 84% or so of Nasdaq-100 components are trading in positive trends on their point and figure charts. And so, those two charts are from Nasdaq Dorsey Wright, and they show you a longer-term picture of strength for the Nasdaq-100, and one that shows that the trend is still a friend for the Nasdaq-100 today.
Let's take a look at the sector composition in the Nasdaq-100 and performance. I would imagine that tech continues to dominate there.
Yeah, for sure. I mean, if we take a step back and see, okay, where's the strength coming from? What's inside the Nasdaq-100? And it's important to realize that over 50% of the Nasdaq-100 is comprised of technology names, right? Continues to be the largest weighting in the index, and it continues to be where a lot of the returns come from, right? If you look at the performance year to date, this is through the end of last month, over 22% of the returns for this index came from that industry, from technology. But there are some other areas that are positive and contributing to this strong run. One example is consumer goods. That's being led by the likes of Tesla, for example, has contributed about 5% to this index. So while we do see a tech-heavy index, we are seeing some participation from other industries like consumer goods, like consumer services. For example, consumer services contribute about 9% to the index. So we are seeing some bright spots outside of just the technology industry.
Right. And Ben, it's interesting to look at the top stocks in the Nasdaq-100. And while they're a big concentration in the index, the sectors they belong to are fairly diversified.
They are, yeah. I mean, if you look at, let's say, the top 10 names in the Nasdaq-100, 60% of the index is in those top 10 names. So you do have some concentration there, and 6 of those 10 are classified as technology through the ICB industry classifications. But you do see some other names from some other industries. 2 are consumer services. Think Amazon and Netflix. You have PayPal, which kind of runs the gamut of technology, finance, but it's classified as industrials, right? And Tesla, of course, is consumer goods. So you do see some other industries represented by some really unique names that are innovative and pushing the boundaries, so to speak. So overall, with these names, you're looking at an average market cap of over 835 billion, and you see a lot of contribution from an R&D standpoint, which drives this type of innovation. I think total annual R&D expense for these names are over 120 billion. So certainly you see tech-heavy names in the top 10, but there are some other industries represented, and I think it's important to remember when you think about the Nasdaq-100.
All right, great stuff, Ben. Thanks for joining us on Trade Talks.
Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.